Hello there, everyone. Hope you're all doing well. All right, let's take just a quick look at SPY here because I think we're set up for a reversal, meaning a move downward. That's going to be probably tradable. I'm not saying the market's going to crash. If you are not an options trader or futures trader, remember we have inverse ETFs we can look at. For example, symbol SH, the Pro Share Short S&P 500 ETF. This moves in the opposite direction of the S&P 500. S&P 500 goes down 5%. This goes up 5%, so forth and so on. For those of you who might be more bearish or have more conviction the market's going to go lower, there's SPXS. This is designed to move in the opposite direction of the S&P by 3 times as much. S&P goes down 5%, this goes up 15%. So you can always make money in any kind of market, and in a lot of ways it's easier to make money in a down market. Why is that? Because markets go down faster than they go up. Markets go down because people sell, and people sell because they're afraid. Markets go up because people are hopeful, and fear is a stronger emotion than hope. So selling tends to be more aggressive. Now, than buying, sorry. Now, not surprisingly, what happened here, we ran into the resistance at the 437 level. We've been following this on SPY. Why is it not surprising? Well, there was support back here, and a lot of times support levels can turn into resistance levels. You can see this on a lot of charts. Why is it that support in August became resistance in October? And it's because you got people that bought back here who thought that they were the next great hedge fund managers in history when the market went higher, but then it goes lower and they tell themselves, this sucks, I made a mistake. If I get out of this, I'm going to. All right, so if it gets back to my price, I'm going to sell. So if you have enough of these remorseful buyers from here placing sell orders over here, the level that was support can convert into resistance. And that's exactly what happened here to within points. We're talking about a market that's worth trillions and trillions of dollars, and yet it can turn literally within a point on a $437 price or level. So this is why the best traders in the institutional world, and I know because I was there for a long time, over 2 decades, they don't follow silly things like Gann theory and Fibonacci. They look at what are the price levels, what's the momentum. Now, markets rallying, just say theoretically you bought down here, you're looking for a price target. Oh, look at that. There was resistance around 437. There's a good chance there's resistance at 437 again because there tends to be resistance at former peaks. That's one of the things that happens in markets. This is also because of buyer's remorse. There are people who bought up here who are like, I made a mistake when the market went lower. If it ever gets back to my price, I'm going to try to sell to get out of break even. So you have remorseful buyers from here placing sell orders here. That creates resistance. You have remorseful buyers from here placing sell orders here. This 437 price level just happens to be important for the S&P. Sometimes price levels are important, sometimes they're not. Sometimes we know why, sometimes we don't. But for whatever reason, this 437 level is important for the S&P. So now, after a few days of hanging out up here, there's probably a good chance it starts to go lower. Some of the sellers who create the resistance, the traders who have their sellers here, they're going to start to look around and be like, wait a second, this thing isn't going up anymore. That must mean that there's new sellers coming in. So if I want to sell my shares, I better cut the price down that I'm willing to sell at. The buyers are going to go to whoever to sell at the lowest price. So you get these sellers undercut each other. They see other sellers do that, and you get the snowball effect. So a lot of times when we get to resistance, we sell off. Now the market's really overbought. All right. Overbought means we're trading at a level that's above what would be its typical or usual range. It's just been really aggressively bought. The market consists of 11 sectors. All right. The 4 biggest sectors, including technology, healthcare, financials, and consumer discretionary, are all overbought and they're all at resistance. So it's pretty rarely, it's not unheard of, but it's pretty rare that the market sets up like this, where you have such a clear picture of most of the market. The 4 sectors I just mentioned are over half the weight of the market at resistance and overbought. So let's just go through those really quick. Here's our technology sector. Now, okay, now it looks like it's breaking out or breaking above, but we got to watch this very carefully, right? This is not as big as a move as it appears. All right, this is 171.50 and it's at 173. So it's 2.5 points on a $170 thing. So it looks like it's getting ahead of it, but it's not out of the woods yet. And it just keeps getting more and more overbought. The healthcare sector looks a little bit similar. Well, actually, I take that back. It's not really moving today. But you see, it got above its support or it's this level a little bit. But remember, we can't, my charts are very precise and clear, and it almost makes them make the moves look bigger than they are. And I mean, I know it because I've been using them for a long time. But this back here is 127.50, and we're at 128.21. So you see, it looks like we're getting above it, but now we're kind of fizzling out. But I think the most important, well, let me go to consumer discretionary first. And we can see this is at clear resistance as well. Now, different sectors drive the market at different times. They're in the driver's seat at different times. To me, it's all about the financials right now. All right. This is the third biggest sector of the market. Some price levels in markets are more important than others. This is the ETF that tracks the financial sector. Look at this 3360 level. Or my grandmother would say, would you look at this? Or my father in law would say, would you look at this 3360 level? It was support back here, and then it converted into resistance, and then it converted into support, and then it converted back into resistance, and now it's resistance again. So support turns into resistance because of buyer's remorse. Resistance can stay resistance because of buyer's remorse, as we discussed. Resistance can turn into support because of seller's remorse. People sell, and then the price goes higher, and a lot of them tell themselves, I made a mistake. I'm going to buy my shares back if I can. And if there's enough remorseful sellers placing buy orders, what was resistance turns into support. Now it's turned back into resistance. And look where we are today. So this black line is 3360, goes all the way back to December. December resistance. So I'm sorry, support. April resistance. June resistance. August support. October resistance. To within a point of a sector that's worth trillions and trillions of dollars. So right now we're literally sitting on this black line. Well, that's why you can't really see the action. It's like right under this black line. See if I move the black line. See there? I'll put it right back. We are at 3360. It looks like it's, it's overbought. It's at an extremely important price level. Have a little bit of reversal action. Within this sector, there is the industry of the banks. And I think that this is probably the banks and the financials are in the driver's seat right now. In reference to what's going to happen in the broader markets. Look at this price level. This is KBE. This is our banking ETF. The financials are the sector. This is the industry, which is within the sector. So resistance, clear, turns into support, very clear, turns back into resistance. We got overbought, gapped up, got to resistance, had this kind of little bit of a reversal day yesterday, and heading down lower. So my estimate is that this goes lower. That pulls the financial sector lower. That pulls the broader market lower. That pulls SPY lower. And if you want to make money, just think about the inverse ETFs that I mentioned if you think the market's going lower. All right. Thanks, everybody. Hope to see you soon. Have a good day.